to the IT major TCS then, which has come out with its Q3 FY24 report card, and that suggests that the numbers are a little better than what the street was penciling in, and at least what ET Now poll suggested. On to the profit figure, the reported profit as of now is at 11,058 crores. Yes, there's an exceptional item with a settlement of a legal claim of 958 crores. On to the consolidated revenue, a little higher than what we were expecting. Our number was close to 60,000 crores, and the company reported 60,583 crores onto their top line, and this is a jump on a sequential basis. When we talk about the margins, that has improved too, because from 24.3%, the margins have seen a jump of 25% this time around, while our expectation was at 24.4%. So a 60 basis point jump versus the expectation is what we have witnessed on this number. There's a 1.7% of constant currency growth, what the company reported in. And other than that, if we talk about their segmental performance, there too, we are seeing that though BFSI on a sequential basis has seen a bit of a decline, but that's the manufacturing segment as well as the consumer segment that has seen a jump up on a sequential basis. So all in all, the numbers look pretty decent coming in from TCS earnings, because the profit, the margin as well as the EBIT margin number is seen to be a little better than what street was penciling in. That's definitely the BFSI segment that has not done or boosted the earnings this time around, but management commentary is awaited that how are they looking at. Winnie, the order book number is also out. What are they suggesting?
Order book number also, Shrishti, $8.1 billion is what the order book is currently standing at as well. So looks like an exciting number on that front, as well as in terms of, what the management commentary or the press release is highlighting, that strong double-digit growth is seeing in the emerging markets, mainly led by India, 23.4% growth there. Also in terms of AI.Cloud, that led demand along with service lines for the company, strong momentum sustaining in terms of cloud generation as well. And when you're looking at the commentary that's coming in from the CEO, Kirti Vasan, as MD and CEO of the company, they're saying the strong performance in a seasonally weak quarter. Obviously, we were expecting, so right now what Shrishti was also highlighting, revenue was above, profits also marginally above on that front as well. And this is despite the macro headwinds that they've seen. They managed to sustain that. They managed to hold on to that. Deal momentum was strong as well. Solid order book visibility is what they're seeing going forward in the long term as well. In terms of long-term growth is what the CEO and MD is highlighting as well. And they're seeing a lot of interest that is coming in from generative AI and leading in terms of innovation, exploratory efforts that are coming in. That is something positive that is highlighted in terms of the demand trends that we've seen from the AI front as well. Other than that, we have the CEO and Executive Director, Mr. Subramaniam, who's also highlighting in terms of the executive strength that they've seen, the execution strength that they've seen coming in. Other than that, in terms of overall, they are on course with BNSL 4G, 5G network rollout is what the company is highlighting, and making good progress in upskilling employees, especially in terms of generative AI. That's the new trend, and that's what is picking up pace as well. So yes, that's how as of now we're seeing in terms of the key highlights that have come in so far as well. Attrition rate also is something that we should keep an eye out on as of now as well. But yes, in terms of first look, not a bad set of numbers. Look at it above in terms of revenue, profits and margins of the company, Shrishti. And like you were mentioning, segment-wise also seems like major markets also for the company have managed to hold on to a decent growth on that front as well.
Well, yes, Winnie, just wanted to highlight the attrition number, because till now the industry was grappling with the attrition number. This time that number has come in at 13.3%, and indeed it's a decline on a sequential basis as well. So a thumbs up coming in on TCS number, but let's get finer details on the TCS numbers, and for this Anisha is joining us to help us understand more about the numbers. Over to you, Anisha.
Well, I think it's a good set of numbers in the initial sense that we have, because the constant currency growth on a year-on-year basis has come in at 1.7%. The company has not disclosed the quarterly number, but nonetheless, the revenue number in terms of rupee has come in at 60,583, which is 500 crores better than what we were expecting. Even if you look at the net income number, despite that one-time adjustment that they have made of around 958 crore, which the street was prepared for, the profitability is also better than expected, and that's stemming from the margin performance, which is coming at around 25%, because that again is better than what we were expecting in terms of the overall margin profile of the company. The a bit of a dampener has come in the sense of the deal win pipeline, because that's a bit lower. It's coming at $8 billion. Last quarter, this number was around $11 billion. Before that also, there was the number of $10 billion for the last 2 consecutive quarters. So from 10 billion plus that we have seen over the last 3 quarters, it's dipped down to 8 billion. So partly it's also on account of seasonality, the kind of movement that we have seen. Having said that, I also wanted to discuss the various segments because it's emerging markets which has reported very solid growth. India is up around 23% on a year-on-year basis. It's manufacturing that reports good growth. Life sciences and healthcare is something which continues to report good growth. However, BFSI, which has been the pain point for the company, has seen a bit of a decline over the last 2 to 3 quarters. This time also, it seems like BFSI might have been soft, and there might be a bit of a decline when it comes to the overall BFSI number of the company. Headcount headcount is also something which is okay in terms of the attrition coming down, which was expected, and the addition is something we'll have to watch out for. We do have a guest joining in on a show to make sense of these numbers. Mayuresh is with us. Mayuresh, first sense on the numbers, because as far as the numbers are concerned, they look better than estimates. The only disappointment, if you must, is coming in on the order book, plus the kind of BFSI number that we are witnessing.
Very good afternoon. No, you're absolutely right. I think the consensus and what TCS has probably delivered on most counts is seeming to be a tad bit better. Obviously, the order book that you mentioned at $8.1 billion, at the lower end of the expected consensus of 8.5 to 9.5. But again, I think it was largely expected for large cap IT companies that there will be some element of slowdown in terms of order wins. But I think going forward, how the commentary is related to client decision making, the client budgeting cycle is going to be extremely critical, as well as the pricing element. When it comes to the industry related growth, obviously a lot of markets where TCS serves, specifically the North American markets, BFSI obviously has been going through a very tough patch in the previous few quarters. And therefore, any comments here of whether the worst is probably over as far as the North American markets are concerned, and whether any green shoots are being seen in the European market as well, including insurance for the European space. I think that is going to be a very interesting element, which should probably add in terms to how the price or the stock might be looked at tomorrow and the next few quarters as well. But I think a decent quarter, barring the order win.
The order book, and the other worry that I see is in terms of the overall headcount. This time the number is around 6,03,305. And if I remember it right faintly, last quarter this number was close to 6,14,000 or 15,000 thereabouts. So there seems to be a sizable dip in the headcount as well. Probably my team will be better placed to check the numbers on a quarter-on-quarter basis. But nonetheless, the commentary at least which is coming in from the CHRO, Milind Lakkar, he says that we are committed to hiring from college campuses and growing talent organically. So they're still talking about going to the campus, because a couple of companies like Wipro, etc., have said that they're not looking at going into the campuses this year. And even if I look at the commentary coming in from the CFO, Samir Seksaria, he's talking about how there's overall improvement in the industry-leading margins that they have reported. They're making the right investments as well. And overall, as far as the deal weakness is concerned, the CEO talks about it, how the deal momentum continues to be strong across markets, and that they have visibility for a strong order book. The other thing, Mayuresh, which is coming up prominently in the press release of the company is the talk about AI and AI.cloud-led demand, what they're talking about. They do say that we are seeing tremendous interest in generative AI and are leading the innovation and efforts for our customers in this area. Do you think AI could be one of those drivers for the entire sector going forward?
Absolutely, no two ways about it. In fact, AI, cloud computing is going to be the way forward. And as a lot of enterprises does this shift in the next few quarters, both in terms of the digitalization effort required across the organization and how inter-organization needs are also probably getting met. My own sense is that these lines of businesses are going to be multi-billion-dollar businesses going forward. So I think the investments in these areas, which all these large-cap companies are probably making, and a few of the mid-cap companies as well, are definitely going to generate good amount of returns from an ROIC perspective. So yeah, I think this is one space which can do really, really well over the next few years.
Yeah, I do have the headcount number that I wanted clarity on. So last quarter, this number was 6,08,985. That's come down this time around to 6,03,000 something. So there has been a reduction of another 6,000 to 7,000 employees. and that will tell you that despite attrition coming down, the companies are not as confident about demand because they are not going to the campuses just yet to hire, and that's quite visible in terms of the segment performance as well that we have. If you look at the BFSI segment, that's down 3% on a year-on-year basis. You also have communications and media that continues to show a bit of a decline. United Kingdom is something which is up 8% from them, but North America again has seen quite a bit of decline. It's down about 3%. So overall, quite a bit of weakness coming in as far as the individual verticals is concerned. So I think overall, if I have to sum up the earnings this time around, there is positivity when you look at the PNL, but if you look at beneath the surface about the indicators for growth going forward, they're not as confident because employee addition hasn't been robust. Deal wins have been a little lower this time, and if you look at the various segments and geographical breakup, you do see signs of worries. Mayuresh, if I can come back to you and ask you, within the IT pack, if you had to pick out the stock which stands the most resilient in terms of the overall headwinds that we are seeing, which is the stock that you would like, because all of the stocks have run up and the valuations are not really that comfortable?
Okay, I mean, point taken in terms of the mid-cap IT space specifically. ER&D companies, platform product companies, all have run up quite significantly. And therefore, one really needs to be a little bit more choosy in this space. The areas, again, where a lot of growth can come through from new areas, like you just pointed out in the case of AI, cloud computing as an example, is going to be one of those more interesting aspects, along with ER&D, because there are accelerated investments happening on the mobility platforms as well.
Line with Mayuresh there, but okay, yes, TCS surely a one to watch out for. As of now, seems like above that the numbers have come in. But what was in terms of an impact was, I believe, that there is, in terms of the attrition, we are keeping an eye out on, as well as the employees that have seen a reduction as well. And in terms of order book, that was much lower than last quarter as well. So that was a number that has come in from TCS as of now.